All right. I am an independent contractor, and I own a sole proprietor LLC that was created in California. I'm about to sign a contract with a company to deliver services in Charlotte, North Carolina. I'll be moving there, so I was thinking to change my incorporation from California to North Carolina. Does this provide any tax benefits?
Okay, I'm gonna stick. He says both incorporation and sole proprietorship, so I'm just gonna stick with sole proprietorship. But let me give you my answer and see if you agree with this. I think I would move to North Carolina, form a new LLC to take on the North Carolina business, and if the and keep the California LLC as long as you're still doing that business there.
Yeah.
If you're not, you dissolve the California LLC and
you could transfer it. Like I think you're right. I would. If this is an independent contractor and they're a sole proprietor, first off, you're probably leaving money on the table if you're making money. Number two, if you're an LLC in California, then there's a sneaky little tax they put on. It's called a gross receipts tax on LLCs that could hit you. The thing about California is they tax you on your worldwide income. So they would just look and say, hey, you're in California, you got an LLC in California, you're making money all over the globe, fantastic. You're making money in Charlotte, great, we're going to tax that too. And it gets pretty, like over $250,000, I think you're at about six grand. It gets up there pretty quick.
Yeah.
Or over $1 million at 6. Below that, it's like 35, something like that.
Yeah, I think at $250,000 you're paying $2,500, and
yeah,
it's a graduated rate, and you can be easily paying up to $24,000.
Yeah, but this is in addition to your individual tax and the state tax. So if you're going to go to North Carolina, you're going to lower your taxes, period, because California is about as bad as it gets. But the one thing I'd be looking at is making sure that whether it makes sense to be an S corp and save yourself, depending on how much you're making, it ends up being about 14% of 2/3 of your income, or about 10% of your income we could save just by changing the entity type. And then we could avoid paying 100% in California. If you no longer reside in California, set up a North Carolina business, you could just keep the California business, like Jeff said, sitting in California, and then we run everything else through the North Carolina business, and you're going to save yourself quite a bit. But those are always ones where you just get your pencil out and you calculate the heck out of it.
Right.
I think that you're probably leaving a bunch of money on the ground. I would actually contact someone and have them look at your tax returns for the last 2 years and see how much you may have cost yourself with your setup. Sometimes it's not exactly pretty. You go, oh man, but you only do that once. Then you go back and say, oh, wait a second. I'm not going to let that happen again.